Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so here we are looking at pre-market prep for Friday, March 7th. And, I'm just going to take you through the normal tickers. And then I do have Nvidia on the list. Didn't get to it yesterday, streaming today. So I should, have plenty of time to get to that. And I'm actually just going to adjust this over here so it matches my window. But yeah, anyways, I am first, as always, going to be going over the UVIX, which is the 2x long VIX futures ETF, which closed yesterday at a price of $42.85, being up over 22% on the day, but pulling back about 50 cents or 1.25% in the pre-market. And so, yeah, I think this is getting pretty interesting because we did not get above the high from, I believe that was Tuesday, March 4th. We hit a high of $44.36, and that does mark the top of this green box here. I could be, actually, I was thinking, I'd have to adjust that for that to be the top. Oh, yeah, what I would have to adjust is to move the right side of this box over to that pivot point and then to, assume that we were getting into this red box. But it's not certain. I don't know. We may still be putting in a new high today or perhaps over the weekend. We get some news. We see market panic and the UVIX and VIX go up over the weekend into Monday. So I'm not going to adjust this box, although it does suggest to me that 44.36 could be the top. But also, I didn't really expect us to be getting up to 40 or above. So, yeah, we could be testing, like I said, I think in yesterday's video, the 200-day moving average, which is right around $47.10 there, maybe getting up to 50. But if we do look at the candle for yesterday, so this green candle here for the 6th, did go up, like I said, 22% on the day. We were not able to get a higher high than that previous high of 44.36. We did not close above that high. And if we look at what we're seeing in the volume here, it does look like volume is kind of getting lower, so there are not as much buyers up here. So, maybe we are not going to be going higher than 44.36. But really, as I'm sure you know, I have no idea. I'm just trying to, map it out and plan for either upside or downside. And yeah, it's interesting. I might, be curious to look at maybe some puts or something if we do go up to 47.10. But maybe if that does happen, maybe we'd be doing something like this. So always very good to be cautious. And, back over here, we were very clearly above that downtrend, that downtrending channel on August 2nd. So that was a Friday before the market gapped up super high. And so that day, this was before a reverse split, but that day on August 2nd, we did close at 104. So yeah, definitely well above where we're at now. But maybe if we're, not closing in the VIX above 20, but if we're closing in the UVIX above this downtrend, maybe that would suggest further upside. So good to be prepared for that. For me personally, I'm not in the UVIX. Unfortunately, I took profits down here. And I'm just hanging out, waiting. I do think that we could be seeing, further downside testing the bottom side of this channel, which would be coming to around maybe, 26, 25, 22.50 or lower, as you can see the downside of that channel there. If I do flip over to the 10-minute time frame, we can see yesterday we did see a pullback bounce from, it looks like the 2,000-minute moving average there, bouncing up and then kind of cooling off a little bit into close, but then just really consolidating there. So yeah, will be interesting to see what happens with this in the day of trading, where we close at. But especially it will be interesting to see where we see the VIX end up. So this is the Market Volatility Index, which closed yesterday at a price of 24.87, up 13.41%. And this is clearly above $20 a share. Would be really nice to see this pull back and close below 20 to see that the market's kind of cooling off. I do think that there's really heightened panic in the markets right now. And maybe that's, blood in the streets, buy that up. But it could be, just continue. There could be more blood in the streets, as always. So good to be cautious of that. But yeah, let's see. There's no volume data here for the VIX, so can't be looking at that. But we did close lower than the high from Tuesday on the 4th, which was at a price of $26.35. We hit a high yesterday of $25.92. And let's see, even like what was the high on Wednesday? That was the 5th. That high was $24.84. And yeah, we did close just above that, so maybe that is a good sign. If we do look at the MACD, though, down here, that does look like it could be kind of flattening out, positive, maybe starting to pull back some. And so, yeah, I mean, we haven't, I guess we have a little bit, but yeah, we could be pulling back to this light blue uptrend, just consolidating around here before we either break to the upside or downside. We do have this uptrending level that did act as support over here. So we could be pulling back to that and acting as support again, but we could be pulling back to this yellow downtrend, which would also coincide with these moving averages here, ranging from about 18 bucks down to around 17. So be prepared for that with the VIX. But yeah, I mean, I think it's just going to be really interesting to see where this closes at. If it closes the week, and actually, I'm just going to remove some drawings. Maybe we can just put this on the weekly time frame. So what are some weeks that we did close the week above 20? So like the last time that happened was, we saw it over here. And then shortly after we saw, a week or two later, we saw this big red candle in November, the beginning of November, it looks like. We saw a 31%, almost 32% downside move over the course of the week. So even if we're closing on a Friday above 20, we could see some downside again over here. Close this week, the beginning of September, above 20, but then the following week down 26%. Over here, though, this is the one that we got to kind of be paying attention to. That week, that was the beginning of August, closed above 20. And then we had this massive move to the upside, but it was very short-lived. And so, good to be, nimble, whether that's with the VIX or the UVIX. Be prepared for a big move to the upside, a plan to exit. I had already exited at only 20%. Nothing too exciting there. But, somebody was mentioning in the comments that they had already taken profits. Too bad they didn't hold up to 40 for the UVIX. But then I just responded with the comment. I think that there's a saying that's like, nobody ever lost taken profits. But I think that maybe a nicer way to phrase that sounds a little more philosophical is, those that take profits don't lose money. And so, if you're taking profits, you can look at this. I guess you lost some potential to make more money, but that's always the case. Those that take profits never lose money, and those that hold through the top always do. You never, if you're holding through the top, you're not going to be selling the top. Nobody ever does. So good to not get too attached to this stuff, and it's just good to be planning it out, and following one's plan, whether that's to make more money or to risk losing less money. Or to take the risk off the table, whatever. Just good to have a plan. So anyways, going over to the SPY, this is the S&P 500 tracking ETF, which closed yesterday at a price of $572.71, being down 1.78% on the day, but going up a little bit in the pre-market. We'll have to look at that in a minute. But yeah, I think Colin Gladman was kind of talking about this, whether it was with the SPY or the SPX, coming down to, we can look over it here, that, 200-day moving average. So the SPX did pierce it, but let's first talk about the SPY, still above that 50-day moving average, as we did hit a low yesterday of $570.12. as you can see marked there. That 200-day moving average is at $569.28. So, potential that this could go a little bit lower, but I think that panic is really, kind of at all-time highs, as we have seen this kind of, straight down move here going down. Looks like 7% in the SPY, and we have broken through all of these levels. But, just because we've broken through these levels, they may be notable levels of resistance on the way up. But I'm actually going to delete this previously filled gap blue line there. But the other levels, I will kind of keep up there, even the doodle. We do have the 786 here. I can remove that because we are clearly trading below that. And so now it's just, a little bit less clutter. There's a little bit less going on here in the middle. And so, yeah, I could just see this coming down maybe a little bit more, maybe getting into the 560s and, bottoming there. And then that being, actually, maybe I do want to redraw this doodle, and I won't do so many zigs and zags in it because, I really have no idea. And so what I could see is something coming down like this, and then maybe something like this. So fewer zigs and zags, but you get the picture there. I think that we could be seeing new all-time highs. I actually didn't even need to put the arrow there. Yeah, I should probably redraw that because I don't necessarily think that we're going to see an arrow there, and that would imply, I think I know what direction it's going after we get up there. I would have to say, oops, no, I want to go down first. I am screwing this all up. So down first, and then something like that. And then that would be putting in an all-time high. No idea where it's going after that. But yeah, from where we're currently at, we could be seeing a further downside move of probably 1%, maybe 2%. And then from there, or from where we're currently at, upside of 7 to 8% or so. Let's see, what does that say? I got the 8, almost 9%. So yeah, there's some potential upside at this point while everybody is kind of panicking because we did sweep the lows over here. People are probably waiting for that 200-day moving average. It did get hit, like I said, with the SPX, but not here with the SPY. So maybe it's kind of like a little tease that we're not going to get there and we go higher. Or maybe it could be that we sweep through it. And so anybody who was maybe thinking about that as a stop loss around 569 being a fun level, they get panicked and expect it to just keep going lower, falling off a cliff here. It's like people, we get, this, oh, it broke through there, then everybody thinks it's just going to do this. But we've already had, a pretty big correction. And so I think that, yeah, we're pretty close to a bounce, and that could be, a short-term bounce, and then we don't continue higher after that. Maybe it's just a dead cat bounce, and we continue lower. So I guess, I could add another scenario on here. This one would be the green scenario, and, the other one that I could do would effectively be, like this, the red scenario. And so I'll just kind of leave those two options up there. And what I might do before I flip over to the SPX is just flip over to the 10-minute time frame here. So we can see that we had kind of this bounce initially yesterday during market hours, but then a dip down to 570.12 towards the end of the day with a little bit of a bounce, a little bit of recovery, followed by consolidation into the after hours, and then a little bit of a pullback in the pre-market. It will be very interesting to see where this opens up. And I think that's actually going to relate to the non-farms payroll. I will flip over to X in just a minute to see Gareth Soloway usually posts his thoughts on that, and so we can kind of get his perspective to see whether that's good or bad. Yeah, I think that with this sell-off, I think that we're kind of pricing in or expecting that data to be bad. The Bitcoin summit, all of that, the reserve, all of that. I think that a lot of stuff's been priced in and we're kind of expecting worst case scenario. And so that's really like the best time to be planning for the bounce. But anyways, let's look over real quick the SPX here. I'm just going to clean this up a little bit, just like I did with the SPY. So just removing that 786, and I'm going to remove this previously filled gap level. And let's see. I mean, that's pretty similar. I do have with the SPX this level here, 580, or sorry, 5,865. But I should note that this is the SPX. This is the S&P 500 index, which closed yesterday at a price of $5,738.52, being down about 1.78%. Does not have pre-market or after hours for this one, so we'll have to wait and see. Now, we do see lower lows here in the stock price, as well as, or the index price, I should say, as well as with the RSI. And so that, there's no divergence there, so that's not bearish or bullish. It's just, lower lows. So it doesn't really look that good, but I think that a lot of people will be seeing that, panicking. Oh, lower lows, this is going to be falling off a cliff now. But we did not close below that 200-day moving average, although we did wick below it. And that 200-day moving average over here with the SPX is $5,730.77. If you want it to the penny, that does look like it is where it is at. But just like what I was talking about with, I believe, the VIX, the MACD here, just kind of the opposite of what I was saying. The MACD here looks like it's red, maybe kind of forming a bottom here. And so I think that this could be flipping around to start seeing some upside. And like over here, this was probably August 5th. We saw the RSI here go to a low of 30.55, nearly into the 30s, which is like the oversold territory. But yeah, from there, that was an excellent dip buying opportunity. And I think that we're getting to a very similar point, but maybe we do see a panic flush down, maybe today, maybe into Monday. Who knows what's going to happen with the news over the weekend. And so, maybe I will doodle it like I have doodled with the SPY, something like that green line. So let's just map that out a little bit. So I think that this could be going a little bit lower, and then we start to bounce above these levels, and then that would correspond with getting to a new all-time high. I'm going to make that the green scenario because the red scenario could be, we get up to here, but then we fall off a cliff. So we'll have to see. Those are the two scenarios. And, obviously, I don't know which one we are going to go to. But I do think that, just like what I did with the SPY, from these all-time highs to where we're currently at, down 6.65%, or down about 7%, to the lows. And so I think that's a pretty big discount. I think that we're looking like we could be seeing some upside, and that would be suggesting a 7 to 8 or 9% move over the course of, I should note here, this is, the middle of May over here with the SPY. This is like the end of May, just doodle, so who knows. But yeah, I think that we could be looking for, a pretty notable rally for the next month or so, but it's just we have to find that bottom first. I think now I will switch over to Bitcoin. Lots of volatility here, lots of people being, I think, disappointed by the strategic Bitcoin reserve announcement. I think it'll be really interesting to see what happens with the crypto summit. I believe that's happening this afternoon. For me, actually, I'll pull this up on X. Let's see. This is a post that I believe I retweeted. And let's see. Yeah, so this is from El Capo of Crypto. So I just wrote 69K, baby. And so I like El Capo of Crypto. I think that, I like his analysis. He doesn't really post too much. And so this is from his, I forget what the Telegram, I think, which I don't have. I'm not a part of or anything. But so Bitcoin to 100K with a quick pump. That's what he's thinking. Ethereum to 3,000K. Sorry, 3,000. So 100K, 3,000. And altcoins 10 to 15% up. And he is thinking that this is going to be a bull trap. And so that could be happening soon. It could be over the weekend. So we see a big pump to the upside over the weekend. We create let's see, market gap or whatever it is over the weekend. And then following that, we see a 30 to 60% drop, and this would be the second shakeout, possibly a black swan event after that bull trap. And so then alt season would be epic after the capitulation event. And so, what he's thinking is, a big pump up to here. People thinking, oh, we're above 100K. This is going to be going to, 200K now. But then we get a massive rug pull down to, this shaded region that I also have marked over here. So pretty cool. What I follow and learn from people like El Capo of crypto. So that's why I have that kind of demand zone there, going back to these highs from, it looks like March from a year ago. And, so that demand zone, it looks like he has marked. I'm just going to remove myself. Let's see. So we can see the numbers there. But so the top of that demand zone is right around 74K. Does look like, that's right around where I have it marked here. I have an alert here at 75K. Plan on picking up, $10 worth there, so nothing too crazy. And then getting into that demand zone, 69 is the bottom of that. And so that is, also what I have marked over here. I guess my demand zone goes a little bit lower, but I have an alert here at 69K. And so my plan, not too exciting, I think I go over this every morning, is, I plan to add $10 more, 75K, plan to add $10 more at 72K. You do you. I'm just sharing what I'm doing. I do a normal daily $5 DCA, so this is just upping that a little bit in addition to the $5 daily DCA. But then if it comes down to 69, or really, I was thinking about it yesterday, if it comes down to 72K, what I plan on doing is mobilizing some funds to then be prepared to buy the dip at 69K, which I also might buy some more of Doge because I'm in that Dogecoin I like, and maybe some more Ethereum, maybe some other alts. I like Ondo. I have some of that. I could get more of it. I also do some other daily DCAs, but just like $1 for some altcoins. I'm trying to accumulate up to $100 worth of them. And and so then I would just kind of more aggressively load the boat here. And then I think that, align with what he's talking about. I think that we could be seeing a pretty massive move to the upside, whether that goes to 200K, 250K, or just like 120K, no idea. But I think that this makes a lot of sense for trapping a lot of people, capitalizing on, those following the crowd and, making some bad decisions, chasing whatever. Because I think that a lot of people were maybe panic selling here. This is definitely going down to the shaded box here, but then we get a bounce. They're like, okay, that's not happening. We're getting this reserve. It's going to be going a lot higher. And then when it does, they're like, yeah, okay, it's definitely not going down to this box. And then when it does, they get rug pulled, and then it goes back down here, and they're like, crap, I missed out, or, I don't have enough capital here. And so it's just, maximum pain for everybody involved. But, if we are going higher, let's see, 102, 103, I believe that does match kind of with what El Capo is saying up here. Well, really just 100,000. And so that would be getting to my little alert level here. So maybe just kind of this range from 100,000 to 103,000. Maybe we get a pump up to there, maybe corresponding with the highs over here. Yeah, that does look like it matches with the 100,000 pretty nicely. And then we, pull back. So yeah, we got a lot of these levels that, I was talking about being a lot of support up here. We do have that purple line around 92, 93,000, which was an excellent dip buying level over here in this range. It could be range trading that. And, that was really notable support before. That's going to be notable resistance now, as we are kind of seeing. But if we blow above that, then I think people start going long, and then we sweep the lows coming down to here. And I think that's just going to be an excellent dip buying opportunity. So I'll still be covering that. I'm excited about that, and I will be, I'll be excited to be buying the dip there. But real quickly, before I flip over to see what Gareth said about, actually maybe before I go over to uranium, it does look like we're maybe seeing some volatility in there. And Benjamin's saying, good morning. Hey, what's up? How's it going? What do I think about FLNC? I'll go over that, but first I'm going to look at what the non-farm payroll is going on, because it might be reflected in some volatility over here. It does seem like we're seeing a little bit of volatility with Bitcoin. I don't even think I mentioned it, around 80. I think it was 88,000 when I started, and now it's 89, almost 90,000. I'm just going to flip over to the non-farm payrolls, go over uranium. And then I do need to go over Nvidia, but I can quickly go over FLNC before I do Nvidia. But yeah, let's look at this. I feel like I should have some notifications going on. So nothing yet. So I'll have to come back to this. Maybe there's some posts about non-farm payrolls came in at 151K, falling short of the 160K consensus. Unemployment rose slightly, 4.1% from the expected 4%. So that's not looking necessarily so good, but good for Bitcoin, I believe. And so that is from Coin Bureau. So just liking that in there. We'll see what Gareth has to say about that in a minute. But first, real quick, just going to look over at ticker symbol URA, which is the Global X Uranium ETF. Closed yesterday at a price of 24.22, being down almost 2% on the day. And, I have to say that this has really, broken below what I was thinking around 24.50, but we're currently right around that level. We got some like discounts around here, and let's see. Yeah, there's no bearish divergence in the RSI, so nothing there. But I think that this is just a nice dip buying opportunity if one is interested in uranium from current price, getting up to fill that gap. That's around 25% move to the upside from the bottom here. That's over 30%, and from the levels that I have marked here, that's 25%. From, let's see, this level here, 18-20% or so. So, yeah, I think that there's potentially a good amount of upside with that. And I might just pull up Oklo real quick because that's one that I've accumulated. I did dip to a level I was talking about yesterday. And I will also pull up FLNC, which is Fluence Energy. So that might actually be related to what I'm talking about with uranium and nuclear. But just real quick, since I was just talking about uranium here, just going to go over Oklo. That did dip to and closed at level that I had highlighted here. I had this alert here, 26. So I added another share yesterday. Nothing too crazy. I got 3 shares of it. And the reason why I'm getting shares rather than doing call options is because I thought that this might go lower, and also the options contracts are kind of pricey. So I wanted to partake in something nuclear and or uranium related, and so I thought that Oklo was a nice play. And also this does have a pretty nice community with the Bronx Viking posting about it, stuff like that. So I thought that there's extra information for me. Just going to remove the golden pocket there because we did come down to that 786, which corresponds with the highs from over here, and that being, I guess, some sort of I don't know why I have. Okay, so this is just a downtrend. That actually I like that because we were trending lower, broke above it, and then went higher. Oh, and the reason why I have that is because that did predict the top here. Now maybe I want to make that red though, so we know that was kind of a take profit level up there. I'm just going to make that a little bit lighter, so it's just a little bit more fun. Now we're pulling back. So I just think that this looks really cool. 200-day moving average. People might be waiting for that down around 18. Maybe we hit it around earnings, which are coming out on the 24th, it looks like. But I think that this could be just a really nice dip buy accumulation zone. So I'm doing it very passively, small position. And maybe we do come down to 18. Maybe I'll just put an alert at 20 if we do go below 20 at this point. Maybe that's the next buy level that I'd want to be looking at. And above, I don't need to, I can actually delete the one at, maybe, let's see, maybe I'll just do one at 25. Just so it's still lower than where we're at. I'm just going to do, actually, no, because I don't need to be paying so close attention to it. I'm just going to delete that. I'll just be waiting for it to come down to 20 or maybe like a week later. Actually, right here, yeah. This is also pretty cool. The 18, that 200-day moving average does correspond pretty nicely with the lows from over here. And so what was the open price from December 16th? That was at 1785. So I do have that marked there. And so, I think that's kind of an appealing level. That might be a nice dip buy level. And so now with this level being marked there, I might make that orange just to differentiate it from the Fibonacci retracement there. But orange and yellow seems like, kind of cautiously dip buying zone. Might remove that level there. And yeah, I think that the green down here, that would be a very exciting level for us to get back to. Ooh, and yeah, okay, so got the red up there. Cool. Anyways, with that being said, I will flip over very quick to Fluence Energy. Let's just look at this really quick. Fluence Energy is a global provider of energy storage products and services and optimization software for renewable and storage energy. So very cool there. And so I'm going to have to say, for me, and you do you, I think it's a time to not be in speculative plays. I think that the market could be topping. We could be entering or have already entered a bear market. So I think it's really good to be having a plan with every single trade that you're in. And for me, personally, I'm trying to kind of get out of positions at effectively break even. So I just have a lot of cash on the side so I can implement that. And currently that's not the scenario that I'm in. So if you're not in FLNC, I say ignore it. If you're in it, I think that there's this pretty big gap down on earnings. It is putting in lower lows. The market cap is less than $1 billion, but it's close to $1 billion. So it's not super small, but it's not super huge. Let's see what's the profile. Where are they located? They do have AI integrated with their stuff, but yeah, I mean, I just think that it's a time to not be in risky plays. We do have what looks like, kind of parallel channel. The top's over here, the bottom's over here, and we broke below that. So, I mean, I think that this looks bearish. We can see, interestingly, the bottom of that channel I was looking at kind of corresponds with the bottoms over here. But yeah, I mean, now this has not only this gap to potentially get back up to, which in all honesty may never happen, or maybe it's years from now, that gap fill, the close, 1307, so got that marked there. Yeah, I mean, but even, just even getting into that gap, there's this trend line, the base of that parallel channel that may mean something, may not, but it'll probably get rejected from that, I would suspect, and then go lower. There's my little crappy doodle of an arrow. Yeah, I mean, I feel like every single trade that's being done right now needs to be done kind of short term with a strategy. And if one does not have that strategy, you could be holding for years. And so maybe that's what one wants to be doing. I'll do yellow for a little caution there. But yeah, I mean, if we just think about this with the upside move, maybe that's a 50% move to get rejected from there. To fill that gap, maybe that's 140% move, but maybe this just fades and goes down. So yeah, I mean, I don't know much about the company, and I feel like it's really just a good time to be trading with a plan. And yeah, I mean, I don't know anything about this company. Who's talking about it? I have no idea. So yeah, so sorry if that's words of caution, but I think it's, yeah, I think it's good to be cautious and not be in, every trade is speculative, every investment is speculative, but this, I have no idea. So yeah, down 3% yesterday, and with actually, let's see, over here, from the highs over here, it's down 78, 80%. I don't know. Yeah, it's very risky. Now let's just come back over here to this notification, probably something from Gareth. So let's see what he has to say about the non-farm payrolls. Non-farm payrolls come in at 151,000 versus 159,000 forecasts. So this is a solid number and may help calm nerves slightly. And so that's kind of not what Coin Bureau was saying. So very interesting, to get his perspective. I have a lot of respect for Gareth here. So, if we look back at the charts, what do we see on that number? We see the SPY going up, 0.25%. It might have been like that when I was talking about. We do see, kind of a bounce there, but nothing too crazy. And then if we look at the UVIX, that's coming down some, around 40, 80. And so we could be seeing a cool off today with the UVIX, that the top, is maybe in, and that we're maybe re-entering kind of a red box for the next couple weeks. And then that would be, maybe to get in at, around 30 or maybe 32. Maybe we're putting in higher lows with the lows for the UVIX and the SPY. Bottom could be in, So I think that, it's the time to be assessing positions, the size of those positions, the risk assessment of those positions. And now I think is a time to really either be taking profits or trimming at break even, consolidating portfolios, and to be executing with a plan, not be spreading oneself so thin. And so I've definitely been doing that, but my positions are fortunately pretty small. But anyways, I didn't go over it yesterday, and so I did want to follow up with Nvidia. So this is ticker symbol, as I'm sure we all know. NVDA closed yesterday at a price of $110.57, being down about 5.75%, 74% on the day, bouncing a little bit, 1.5% in the pre-market up to around 112. If we do look at, I'm just going to remove my drawings for this because there are too many up there. If we do look at the 10-minute time frame, it's really just kind of flat, in the pre-market, going up, floating up a little bit, nothing too crazy. Did see a bounce in the early hours of trading yesterday on the 6th, to then pull back to that low of 110.22 before just floating up into the after hours and pre-market. So looking back over at the daily, we are below that 200-day moving average. Did get this big red candle down following earnings on February 26th. And so we're putting in lower lows here. So this doesn't really look so great. I must say, though, if I'm going to flip over to Twitter, let's see, excuse me. I'm just going to flip over. These are the people I kind of follow. I don't really need to search for, have Greg up there. But Mr. Chart Norris, I can just search his profile for what he said recently about NVDA. So let's look up that. And so latest weekly chart, he's got this going on where, descending broadening wedge, and this is right angled descending broadening wedge. So that would suggest, kind of a move to the upside here, but maybe we do go a little bit lower to this volume shelf, or what I understand is actually referred to as a node. Low volume node here, high volume node there. That could be acting as support when we fill this one. And, let's see. And for those who have been following me for years, what have I always told you about NVIDIA every time it dipped? And so he says here, and so if I see NVIDIA at 115, 110, or 100, if seeing NVIDIA at 115, 110, 100 makes you sad, then trading isn't for you. Those who have been following me for over a year understand what I mean. I've given plenty of examples every time NVIDIA dipped. And so what he's saying is NVIDIA is below 115 now. That is a dip buying opportunity, is in his opinion. I feel like, just generally sentiment, there's a lot of bearish sentiment. I've seen that from Colin Gladman. He's, I think, just thinking that this could be going a little bit lower. And so with this, what I might do is create an alert at, right around 100. So let's go below 100. And so, I'm not saying I disagree with Mr. Chart Norris. I do like his analysis a lot, and I think that he's probably right. But for me and my risk profile, I am not going to buy the dip here. If it goes to 100, maybe I'd get, in all honesty, 10% of a share. So spend $10 buying that dip, and then that would be just for kind of a fun swing, thinking that, it might be doing something like I have drawn out here in yellow. And so I am going to now assess what I have drawn up here to see what I'm thinking. And so, there are some levels here. I mean, it does seem like it's a lot of clutter, but let's see. This does look like it's a trend line. We've clearly broken below that, and that does not correspond with the white horizontal lines, which are a Fibonacci retracement. And so we have, it looks like, broken below this 618. So I'm going to remove that. And we do have, kind of a confluence of levels. So I'm just going to make sure that these lows and highs do match, because I do not have this locked into place. And so that is, based on those lows and highs, the low 90.68, as you can see over there. So I'm just going to make this 90.68. And then the high over here is 150. 313, as you can see there. So that does look like it is lined up just right. And so I'm going to say that right around that level, 105, 104.04 is the 786. That seems like it's a kind of a really appealing dip buy level there. We do have this kind of peach line there. I might make that light blue. Yeah, so I think that this could be going a little bit lower, kind of as I have doodled out here. And my thesis with this, and maybe I'm completely wrong about this, my thesis with Nvidia is people are going to see this as, oh, there's a left shoulder here, oh, there's a right, there's a head here, and then we pull back here. Maybe we're seeing it here. Maybe we saw it there. People are going to see, yeah, this head and shoulders pattern, and then this would be then going to the upside. And so actually, yeah, I mean, that's pretty cool what I drew there. It's just, really kind of bold. So I might make that a little bit thinner, a little bit thicker, and I might make that kind of gray. And so, yeah, it's not too invasive, but I think that we could see, people kind of saying, hey, there's a head and shoulders pattern here right now. And then maybe we get a break, a bounce up to test that neckline, and then it goes lower. And so that's what I think people could be seeing, could be saying. And just to give kind of some perspective with that, neckline over here. And so I think that people are probably thinking that. And then if I, bring this over here, then there we get a retest of that neckline, a bounce to retrace to that before going lower. So I'm just going to make that purple. And yeah, I mean, I don't necessarily think that's happening. This downtrend, I might make that yellow just so we distinguish it from the little doodle and neckline that I have drawn there. That's in purple. So yeah, I mean, I think a lot of people could be seeing that. But what I think is more likely, I must say, is not that. I think that's going to be kind of a fake out. I think that what is more likely is what I have drawn here. And I might make that solid. I'm going to make it thicker. Something like that. So maybe I don't know. I don't really know. I mean, I think that we could be having a top end. I think that people could be panicking and, selling. What color do I want to make that? I don't know. Orange, I guess. I don't know. Yeah, but I mean, I think that for me, maybe I want to adjust this level to, maybe I want to add another alert here. So I'm just going to go here. I'm going to add another alert, going to do it below 105. And so maybe those are levels to buy the dips at. Agreeing with Mr. Chart Norris in the sense that when there are dips, there are good opportunities to add. Also agreeing with Colin Gladman that we could be seeing further downside. Also agreeing with Tom Lee. I think you can tune into him on, I believe, CNBC. He is the leader of Fundstrat. And yeah, I think that he's been calling everything really nicely. Really, it's just like, we're seeing kind of a panic choppy mode here. And, we could be going a little bit lower to 105, 101, or sorry, 100. And I would view that as, yeah, dip buying opportunity. And from there, from either of those levels, from the 786 at 104 to fill this gap here, that's a 36% move to the upside to getting back to those all-time highs. About 50% move to the upside. And yeah, this could be going higher. And so I think that we're just getting a big shakeout right now. And so I think it's good to have a plan for if it were to go lower to be able to buy those dips. But I also think it's good to plan for, like Mr. Chart Norris is saying, at 110, this is a potential great dip buying opportunity. And with the technology revolution that we're seeing, I think that we could be seeing Nvidia just continue higher. And I think that this really just kind of aligns with Bitcoin and the 4-year cycle, and that in the halving year, we start to see the bottom, we start to see a big rally, but we really don't see the big top, the big volatility, the big moves to the upside, the parabolic moves into, the, let's see, I actually got this mapped out in, let's see, TradingView. Natural gas, by the way, coming down a little bit, but if I do go over to Bitcoin, I believe I have this mapped out in Coinbase. Yep, halving, was right here. And if we do look at in the past, halving, and then a year later, the parabolic moves to the upside. And we did, see a big move here, pull back over the course of the year in 2021 to the top at the end of the year in November. And so, yeah, I think that Bitcoin's probably going to be seeing new all-time highs, whether that's, I think in the time range between May and the end of December. I think that we'll be seeing some parabolic moves in Bitcoin. And with that, we talk about, does Bitcoin follow the S&P 500? Or maybe there's some, dancing there, sharing the lead. And, what was I just talking about? Nvidia. I think that, we're just going to be seeing a lot of moves to the upside, S&P 500, Nvidia, Bitcoin, but there's going to be volatility between now and then. And so I think it's good to be planning for a dip to around 100, maybe not quite, maybe to 105. But I think it's also good to be planning for 110 to be the bottom and to get a move like this. But yeah, I'm standing by that analysis. But if we, because I just think that people are going to draw this purple line here and say, hey, that's a, actually, maybe I want to just do this a little bit more precise. So let's see, I'm just going to do a ray from that low to the low over here. And then if I just kind of like extend that over, to something like that, that would be like the, neckline that everybody is spotting and that we kind of broke below it. And so I think that people will be expecting, kind of a bounce from here to test that and then get rejected. Or I think that people will be expecting, if we do continue lower like this, a bounce to retest that and then get rejected. But I don't think that, I think that this is probably going higher towards the end of the year. I am overall bigger picture bullish. I think that we're in kind of panic mode right now. So just good to have a plan. But, like I'm saying with FLNC, I think it's a good time to not be getting overexposed to speculative positions. I have no idea about this one. I have not heard of it. And so that just makes me think it's one that's a little too speculative. And so, I think it's just good to be having a plan. Honing in on the big ones. So hopefully that's helpful. I got 2 minutes before the 9 o'clock hour, and so I'm going to be signing off, just getting ready to, I might share some of the stuff that I plan on watching today if you guys are curious. So just going over to the DGen Ed channel and going over to my subscriptions, some stuff that I am planning on watching today. Let's see. I do plan on watching this basically starting in a couple minutes, 8 o'clock, and that's because I'm in the Midwest. This is the game plan with Gareth Soloway, and then I'm definitely going to be tuning into this, but probably after I watch Gareth's analysis of the charts. And this is Scott Milker's channel talking about the Bitcoin Strategic Reserve. So that's going to be very interesting. And I did watch this already. Trump Bitcoin Reserve Trap. This is from Crypto Rover. And if I do click over to his channel, he is going to be going over alt season. It starts now. Here is, so that's something that he has pinned there. He does have something live coming up, I believe. And so this is, scheduled for 12 p.m. That's going to be Midwest. So that's going to be 1 p.m. Eastern. He's going to be live streaming the crypto White House stuff. So I think that's one that I will be tuning into just to kind of get his commentary on it. And I think that it's a good time to be managing risk, managing expectations, and planning to take profits, planning to trim it, break even. So one does have cash reserves on the side if we do get dips down to, like I said, 100 here for Nvidia. But I think that overall we're going to be seeing higher highs later in the year. It's just now is just an insanely volatile and kind of like bearish sentiment mode. So good to plan for that. And then Mr. Bagel Show, sup, like Nvidia too, but I think this is coming from Mr. Bagel Show, but I think I'm gonna try chicken farming this summer and hold my AMC till we go to the moon. Yeah, sounds good. And to be honest, I will probably be putting out a video on AMC later today after close. Whether or not we hit the level I've been talking about, just because I think it's compelling. I did just put out a video. I'm not to self-promote or anything, but my channel, so I might as well. Coming back here, I did put out this video on... nope, sorry, not that one. So videos, what I did just put out, it's only gotten 42 views, and just going over some unusual whales data that suggests millions are going long on GameStop, and I actually could pull that up. Actually, I want to do that over here, and not looking at Neo, looking at, okay, so contract lookup, I don't want that. The custom flow, okay, so these are the ones that I went over in that video, and so this is the... let's see, this one, $29 call that expires. I'm going to get out of the way for this. This is a $29 call that expires in April. And so we did see, yeah, exactly what I talked about in that video. This is, $1 million. So let's see, whatever percentage that is, I'm not going to do the math right now. $1 million going long GameStop for that contract. These other ones up here, we can see, yeah, millions going long. And so which one was that? So that was the 55, I'm not sure. And then the 40, yeah, millions going long. So I think that that's just... I think that we might be in, moon season, Mr. Bagel Show. I think that we're seeing data with GameStop, which might translate to something, going on with AMC. So I think that this is the time to keep it cool, not be panicked. It's just like I'll pull this up and I'll end on this post here. So I'm just going to come to my profile, go to some replies. I might have some trolling stuff in here, so I apologize about that. Yeah, so this is, Mr. Chart Norris. This part is going too well, like those. And yeah, I mean, this is what I think that we should be doing. Keeping it cool, execute plans, do not panic, do not sell at these dip buying opportunities or chill opportunities. But anyways, as always, going to bring Ed back for this. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe for more videos like this. Thank you so much for watching. Have a great day trading Friday, and I'll probably have another video out, multiple videos out later today. Take care, and I'll just respond to Mr. Bagel Show's response, and then I'll sign off. Could be an interesting day with the reserve being created. Yeah, so I'm definitely going to be tuning into the crypto rovers stream of that, so I'll share that. Could be very exciting. And then Crypto Rover follows up with an interesting day with the reserve being created. Good luck to everybody, I should say. And then Mr. Bagel Show continues on. I'm 100% serious about chicken farming and AMC. I am all in. Just as long as you manage your risk, as long as you have plans for it, because we might be seeing a big upside move and then a very quick downside move. So do plan for that. Yeah, or, just, whatever your strategy is, make sure you execute that. Don't listen to anybody on the internet if they're shaming you, if you're trying to take profits, or if they're shaming you for not. You do you. Just make sure that you're responsible for the decisions that you make. And we just have fun together along the way on our journey, getting better, trading, investing, and all of that. But anyways, thank you so much for watching. I'll talk to you guys later. Cheers.